Hello traders, this is part 2, how to trade a Fibonacci retracement like a pro, part 2. We recommend to trader to watch the first part before watching the second part. In the first part, we were using a rising channel and a declining channel, highlighting, the key levels, the Fibonacci retracement key level that we must use in a rising channel and a declining channel. And also we were combining the market patterns with the market geometry. In this video, in the second part, we're going to continue. This time we were going to use the horizontal market pattern. Okay, without wasting my time, you can see here that the price was in a horizontal channel. All right, here it is. In a horizontal channel. I want trader to pay attention, especially if you are swing trader or position trader. You may say to me, John, how one can use the Fibonacci retracement level in a horizontal channel? Because the price is oscillating between two levels. I will show you now how you do that like a professional trader. Whenever you see the price oscillating, the price is acknowledging a key level, either a support, a resistance, or there is a high trading volume. Did you get that? Never forget that. Whenever you see any financial instrument, commodity, stocks, currency consolidating on any time frame, the price acknowledging a resistance or a support, a key level, or a high trading volume. One of them, okay? So get that clearly. So how do we use Fibonacci retracement level? It is difficult to use Fibonacci retracement level in a horizontal channel because we want to sell at the top of, so how trader trade horizontal channel. So you touch it here, all right? You touch it here, and we are waiting for it to touch it for the third time, and the third time, here is a bearish setup. We can buy also, so we can buy and sell in a horizontal channel. So the lower part, you touch it here, okay? Here you couldn't touch it, come very close. We are waiting for the third time for the price to come here. This will be a bullish setup for us because we are on a daily chart. We use the trading drill and we use a multiple time frame trading method. The setup, the signal, and the low risk entry point without ignoring the fundamental. The stock we are looking here is called Kraft Foods Group, EPIC, KRFT, listed on the NASDAQ 100. So technical and fundamental. This is my recommendation to all traders. Technical trading and fundamental trading, Google Finance, Yahoo Finance. For Forex traders, Forex Factory. Do not use the technical alone. All right? So here we are, the price oscillating in two levels. How do we use Fibonacci retracement here? We need to look on our left-hand side. So whenever you see like this, you want to use Fibonacci retracement level, look on your left-hand side. What the price has done before is start consolidating. You will see that here you can see that the price went up first. It went up from here to here. So you will not draw the Fibonacci retracement level in a consolidation session, but you will draw it on the prior move, which means what the price has done before. Price went up from A to B. So I draw my Fibonacci retracement level already on my chart. Now I'll highlight the key level. Whenever myself, personally, I'm using Fibonacci retracement level, the level that I'm watching carefully is the 50% and the 61.8%. Because if the financial instrument is bullish, there's a high chance that it will find a support if the fundamental, repeat, if the fundamentals are solid, that it will, if it pull back, which we call a healthy pullback, will stop in this zone between the 50% and the 61.8. You see how finally it was touching the edge of the lower part of the horizontal channel, but they tried to push it into that sweet spot zone. All right? So we see a consolidation. We want to use Fibonacci retracement level. We check on our left-hand side what has happened before. The price went up from here to here. Let me draw the Fibonacci retracement level from here to here. Now we are watching the 50% and the 61.8%. So as a swing trader, I'm positioned, I'm looking for opportunity to buy. I will ignore because I know that the prior move was bullish, all right? So I may decide not to sell here. I may decide to just step aside, let other traders sell it. But if I want to sell, as it's touching the the upper side of the horizontal channel for the third time. Remember, the third time, at least 1, 2, and then the third time is more reliable. The third time, okay, more reliable here, okay. So as I see like this, okay, that the prior move was very bullish, and the price consolidating. The price are not acknowledging a key level. Another thing that you can do is to go to the higher time frame, because sometimes you may not see the key level that the price is acknowledging. Some of these key level can be okay, the critical price level. Check the article that I wrote about trading the 6 critical price level. These key levels are from the yearly chart. So we can be curious. We go to the weekly chart to see which key level the price is acknowledging here. So if I can see on the weekly chart, I go to the monthly chart, and I want to see, you can see my horizontal line here, okay? On the monthly chart, again, is consolidating here. Then I'm pushing my curiosity to the higher time frame, because I want to see the bigger picture, all right? Why the price is consolidating, which key level the price is acknowledging, all right? This is what we want to know. You can see that the 50% Fibonacci retracement level that we have highlighted is almost the opening price, is almost equal to the opening price of this quarterly candlestick bar. So we know that the high, the low, the opening price, and the closing price of the monthly, quarterly chart, yearly charts are key levels. So it looks to me that the price also is acknowledging, okay, the opening price of this quarterly candle, and also the closing price of this quarterly candle. Okay, let's go now to the yearly chart. Okay, this is, okay, hold on please. All right. Okay, I need to go back again to my quarterly chart. Okay, all right, and then we go to the yearly chart. Because the price was consolidating, I want to know which key levels. I need more data here. All right. Okay, and I go to the yearly chart, and I want to see which key levels the price is acknowledging. Okay, I can't see what I'm looking for, so I'll go back again to my daily chart before I mess everything up here. So you understand the point. So the price consolidating on the daily chart, okay, we want to know the key levels that the price is acknowledging here. We go to the higher time frame to check the key level. Very often, we can also see a high trading volume when the price is consolidating. By using Fibonacci retracement level, for the horizontal market pattern, we are looking at our left-hand side to check what the price has done before. Because the price went up before, and it pulled back near the 50% zone, and it's consolidating. I want to give priority to bullish signal in the zone of 50% and the 61.8% zone. Finally, the smart money who was so desperate to buy this stock, provided that the fundamentals are solid, check Google Finance, they perform the Google Finance test, check the economy news. If there is a fundamental reason to support the technical setup, well, okay, this is the best place to buy. And they bought it between the 50% and the 61.8%. This is a bullish setup. We don't just buy, all right? We do our due diligence, and we use a multiple time frame trading method, okay, to enter the trade. This is a setup, the signal, and a low risk entry point. Day traders using the TST24 trading system as the price retesting the edge of the lower part of the channel. It's a bullish setup. Around the 50% Fibonacci retracement level, we have an horizontal market pattern. We can buy on the lower part of the horizontal channel. Okay, we look on the left-hand side. The prior move was bullish. The market sentiment is bullish. The dominant force is bullish. We want to go to the first best time frame, looking for a bullish signal. Let's check my time again. I've been talking to you now 9 minutes. This is how we can combine a Fibonacci, okay, retracement and the horizontal market pattern. In a downtrend, we will see something else. So in a downtrend, what will happen? I'm going to draw lines on this chart. 1 second, please. I'm going to remove all my previous drawing. All right. In a downtrend, what is happening? So the picture I want you to get is this. So price went down fast. So now the price start consolidating somewhere here. all right? And we want to use Fibonacci retracement level, all right? We will draw the Fibonacci retracement level. So because the price oscillating is acknowledging a key level, we go to the higher time frame to check which key level the price acknowledging, all right? Now we come back to our setup time frame. Here I'm using daily chart as my setup time frame, and then because I look on my left hand side, I see that the price was going down before, then I draw my Fibonacci retracement line. Now, okay, let's push it. Let's see that the price. Let's say that the price was oscillating in this session. Okay, so I noticed that the upper side of my horizontal channel is on the edge of 38.2% Fibonacci retracement level of the prior move. This is the prior move. So, because I understand what is taking place, I will go to Google Finance, check the fundamentals, do my due diligence on Google Finance. Then, I will look for opportunity to sell on the upper side of the channel here. Though the price is oscillating, I will be very careful if I'm buying on the lower part of the channel here because the prior move is bearish. At least if I'm desperate to sell, I'll prefer it to be below the lower part of the channel. If I'm desperate to buy, in this case, because it went down, if I'm desperate to buy, I prefer it to D below this level, and then to go back above it before I buy, which means a rejection below the lower part of the channel, and then goes back below it. That's what we see here before. You see, when I draw the horizontal line, it D below to retest the zone of 50%, 61.8%, before returning back inside the rising channel. This is how we can use Fibonacci retracement level and the horizontal channel. The beauty of this method of trading is that we are not stepping on the foot of the fundamental trading, and we are not violating the market pattern. One of the reasons why traders are losing or investors are losing is because a fundamental trader may say to me that technical trading is just a mambo jumbo, or area wave trading is a mambo jumbo. It's not a mambo jumbo. It's like you are showing a total disrespect to other market participants. On the other hand, a technical trader may say to me that I do not need to check Google Finance, I do not need to check Yahoo Finance, I do not need to check Forex Factory, I don't want to know the market sentiment, and he or she will just place a trade because he or she has seen a technical setup. That's not the right way forward. Let's move on. So now, so far, from the first part of this video, we talk about a rising channel and a declining channel. In this second part, we have demonstrated to traders how we can use Fibonacci retracement level and horizontal channel. In order to achieve consistent winning trade, which I say to trade 100 times, we do not want to violate what? The market pattern. And we want to use what? The trading rhythm. A setup on a signal, a setup time frame, the signal, and a low risk entry point. You see the setup, you validate the setup by going to the higher time frame. You see a consolidation, the consolidation is acknowledging a key level. We want to know which key level, we go to the higher time frames. It makes sense? It is also powerful. What I'm going to do now, I'm going to pause the video, and because I need to draw lines, I'm going to bring on now the volume bars. How we can use the Fibonacci retracement level and the volume bar. By the way, before I pause the video, I need to say to the TSTWSYS008 traders, there is a page at www.tstwsys008.com where I explain to traders trading setup with the volume bar. So check it out. So you may see more information about some of the things that I'm discussing here, because I went a little bit deeper on our webpage. Okay, so pausing the video and we'll come back to it shortly. Let's continue how one can combine Fibonacci retracement level with the volume bar. The first thing I need to say to traders, I'm going to refer traders to www.dprotraders.com. Check the webpage that we call volume stock trading. This will allow you to understand how to use the volume bar to trade stocks or any financial instrument that we can use the volume bar for. All right, www.dayprotrader.com. Click on the volume stock trading. All right. What do I care about, ladies and gentlemen? I care about practical trading tips that traders can learn and put into use, to cream the market consistently. That's what I care about. So now we have a volume bar on my chart. You can see here, these are the volume bar. You see here, I have a moving average 50 for my volume bar here. And when we are using a volume bar, that's why I recommend that you go to dayprotrader.com to understand everything, because I don't want the video to be too long. We are looking for a surge in trading volume, which means increase in trading activity. So we want to see first a normal volumes, all right? Then suddenly, boom, a surge in trading volume. That's why you see those torque volume bar. That's what we are looking for, right here, all right? Look carefully here. You see this one here, all right? You see here, there was a surge in trading volume here. But bear with me. The price, you see this point, and this point allow me to draw the first line here. And I can choose one point at the top, which this point here, all right, to make it parallel. So I have my rising channel ready. I'm waiting for the third time. Here it is. It's retesting it. But as you can see, we are looking at, okay, a stock listed on the Nasdaq 100, MNST, Monster Beverage Corporate. You should know that drink if you drink Monster Beverage. They produce what we call energy drinks. Monster Beverage Corporation, EPIC MNST, Mike November Sierra Tango. And we have our rising channel here. And you can see that the price was retesting the lower part of the rising channel. It went below it a little bit. That's why I'm saying to you, use the top-down trading method. It's a setup. You wait until the common center line is what? Kaput. All right? Broken. Then you will look for opportunity to buy. Okay? All right? So here, the third time here, is again, you see, boom. Trader responded and buy it here. Look carefully. So this is the price went up from here to this point here, and a pull back into the zone of 61.8%, which is a little bit below the lower part of the rising channel. It's okay. All we need to do is to wait for it to return back inside the channel. So the price retested the zone between the 50% and 61.8% on a daily chart. It's a bullish setup. If it closes back inside the channel, you see on the edge here, after this day here, now we are ready looking for opportunity to buy. We will check the fundamental, do our due diligence at Google Finance, and then game on. But I want you to pay attention to this level. So this is about Fibonacci retracement level on the edge of a rising channel. Pay attention carefully. Yet again, I want to remove a line because I'm under pressure now. All right. Here again, you can see. Hold on, please. Yet again, you can see that the price went up from here up to this point. Went up from here to here, okay? We can use Fibonacci retracement level. Now, it pulled back to the edge of the rising channel. And the price was at what? Okay. It was at, again, at 61.8% Fibonacci retracement level of the move from here to here. This is beautiful. The price in the rising channel went out of the rising channel. We can use market geometry. And then it went back inside the channel, retest almost the median line of this channel, and then pull back on the edge, which is 61.8% Fibonacci retracement level of the move from here to here. Trader responded and bought it. The price went up 1, 2, 3, 4, 5. Area wave traders. Now the price pulled back. Look. In 3 moves. Pull back in 3 moves. Yes or no? To retest again the edge of the channel. Look at the surge in trading volume. What is the surge in trading volume is telling us? The price, so what we will do at this point in time, combining Fibonacci retracement level, and, okay, I'm going over my 20 minutes again very soon. That's okay. So I'll let it run a little bit more. My apologies to traders. So the price retests in the lower part of the rising channel. We see also what? A surge in trading volume. Now, on this day, you will notice even on the 15 minutes, on the 30 minutes, on the hourly chart, that we have a surge in trading volume at this point in time. And you know that the price has retested the lower part of the channel. What do you need to do using Fibonacci retracement level? We look on our left-hand side. The price went up from here to here. It went up from here to here, from here to here, and then you pull back 1, 2, 3, retesting the edge of the rising channel. This is a bullish setup. Now we are watching the volume. On this day, you can, because the price retesting the edge of the rising channel, it's a bullish setup. The price is also using the Fibonacci retracement level of the move from here to here. We are at which zone? This is the 50% Fibonacci retracement level. So, like I say to you, when I'm using Fibonacci retracement level, I'm watching the 50% and the 61.8% Fibonacci retracement level. This is a technical setup. We'll check the economy news at Google Finance. We will do our due diligence, okay? And game on. Here it is on the edge, and we have a surge in trading volume. I will not dwell too much on the volume bar, how we can use volume bar and the Fibonacci retracement level. I will send traders to www.dayprotrader.com. Click on the web page that we call, okay, volume stock trading. All right. So at this day, on this particular day, we'll go to the, for instance, we can go to the hourly chart and monitor. You see my, you see here, okay, in fact, the price gap up. See, it went up, start going up gently. And what has happened here, I can explain it to you. Very often, if you're on a daily chart, all right, pay attention carefully to what I'm going to say now. If you're on a daily chart, wait 5 minutes before the market is about to close. Repeat, 5 minutes before the market will close. You will notice a surge in trading volume. So on a daily chart that day, you will see that suddenly, 5 minutes before the market is about to close, we have a surge in trading volume. You want to know why we have a surge in trading volume. There is a surge in trading volume on that day because the bull were buying. And the following day, the price gap up. So if you monitor the market 5 minutes before the market is closed, a surge in trading volume at a bullish hotspot trading zone, you analyze everything carefully, you may decide to buy and wait for the next day, and you are likely to catch a gap up. This is what has happened here. So 5 minutes before the market to close, you can check if you have a surge, a substantial surge in trading volume. You see here, the average volume was around 1.3 million, and you have a surge up to 20 million. Some people are buying. These are big market players. Probably the hedge fund, the banks are buying. So do not just buy because you see a surge in trading volume. Analyze everything carefully before you buy. The price was retesting the 50% of the prior move. The move from here to here, come back down in 3 moves. Traders who understand area wave will be salivating, and we see a surge in trading volume at a 50% Fibonacci retracement level. This is a bullish setup. We'll use the trading drill without violating the market pattern. Here the market pattern is a rising channel, and also we'll check the fundamentals. Ladies and gentlemen, in this second part, we were talking about how one can combine the Fibonacci retracement level and the horizontal market pattern. And we also talk about, okay, the surge in trading volume. I want to draw your attention to more volume bar here on the daily chart for this macro stock. You can see there, these are the, you see the surge, the tall volume, there's one here. Pay attention to this one here. Okay, hold on please. Pay attention to this volume bar here. You see this surge in trading volume bar. Let's zoom into it so you can see clearly. This one here, you see this one? This is surge in trading volume. Normal volume, surge in trading volume on this day here. All right? On that day, because you look on your left-hand side again, what the price has done before, they were buying. You see there was a pullback, and then the price went up from here to this point here. All right? And you want to know which Fibonacci retracement level the price was retesting. The price was retesting at that point in time the 61.8% Fibonacci retracement level. And also, at the closing of this candle bar, you will notice it 5 minutes before the market is about to close, you see a tall volume bar. So you'll be wondering, tomorrow, probably, we will monitor that stock. We will put it on our watch list because the prior move is bullish. We are, okay, primarily bullish unless the price goes below our warning line, always draw your warning line. So the price was at 61.8% after prior bullish move, retesting 61.8%, and we have a surge in trading volume. The next thing we go to Google Finance, we assess the economy news. What's going on? Are they selling? Are they buying? So because you want to buy, you want the market environment to be bullish. All right. So if there are many bearish news concerning the stock, you don't want to fight the market sentiment, yes or no. That would be crazy. All right. That would be crazy. And also, you don't want to violate the market pattern at this point in time. So if you draw a line like this, so you see, first time, second time, and the third time he was desperate to retest this trend line here. Let's call it in orange. Okay. There was a low, a higher low, and the price was desperate to retest that level, which is also 61.8% Fibonacci retracement level of the move from here to here. And we have a surge in trading volume. To summarize this second part, in order to use Fibonacci retracement level with the horizontal market pattern, one must always validate the consolidation zone. When the price is consolidating, the price is acknowledging a key levels. We can go to the higher time frame to validate the key levels. If the price, then we look on our left hand side. If the prior move is bullish, we want to look for opportunity to buy on the lower part of the horizontal channel. But we will use the Fibonacci retracement level to highlight which Fibonacci retracement level the price is acknowledging. We can also use volume bar. We are looking for a surge in trading volume bar, a substantial surge in trading volume bar on the edge of a Fibonacci retracement level. This is a technical setup. We will always, forgive me to say this 100 times because that's where traders are failing. All right, check Google Finance, check Forex Factory if you trade in currency, and from there you have a setup. You want the market sentiment to be bullish when you're about to buy. You want the market sentiment to be bearish towards the financial instrument that you are trading. At the time when you're about to sell, you see a bearish setup. You want to back it with bearish sentiment. All right, and then from there onward, you use the trading drill in your trading system to set up the signal and the low risk entry point. If you are day trading, you see the setup. Using the TSCW24, you go to the first best time frame. If you are TSCW as usual a trader, swing trading, you see the setup, you wait for the signal time frame. Now, at the time when you're about to enter the trade, you use the TSCW key 02 to enter the trade at a low risk entry point. If the risk is too high, walk away. I hope you have learned something from this video also, and we put into use, to make excellent decisions. Until the next time, enjoy yourself and be very happy. This is about how to trade Fibonacci retracement like a pro, part 2. In the third part of this video, we will be talking about how one can combine Fibonacci retracement and the Elliott wave pattern. We will also talk about Fibonacci patterns and harmonic trading. I recommend to traders to stay with me and to watch the third part of this video, where I will be highlighting some tips and tricks about Elliott wave and the Fibonacci retracement level, plus the Fibonacci pattern. See you in the third part of this video. If you like this video, please give us the thumbs up. If you dislike this video, give us the thumbs down. If you have any comment, put it below.